Hello. So, Vikran Engineering, year of outlier growth. So, today we're going to discuss the company's historical financials. Who is Vikran Engineering? What do they actually do? And the future growth guidance to see if they can have an year of outlier growth. Now, this is not some any kind of stock recommendation or anything. I own some stock of this company. So it's very important to understand I am very much incentivized. So the setup is year of outlier growth, question mark. Can they achieve it or not? So first, who is this company? It's a 1,800 crore-ish market cap company. You can see price to earnings of around 20. You can see ROE, return on capital employed also, and the current market price 71.6, somewhere around that. Now let's see the historical financials. Now these are in crores or rupees. First, let's go and see the revenue. Revenue 1,249 crores in fiscal year 26, 916 crores in fiscal year 25, and we go on back. But note the growth rate. Okay. 916 crores to 1,249 crores. So there is growth. There is growth, but note the growth rate, the rate of growth. Even from 786 crores to 916 crores, and then 524 to 786, good growth rate. That is a good growth rate. There is growth, but note the growth rate. Then we have the EBITDA. EBITDA of I think this is yes, 175 crores in fiscal year 26. This was 160 crores in fiscal year 25, 133 crores in fiscal year 24. And note the EBITDA margins fell in fiscal year 26 to 14%. So EBITDA margins fell. Again, note the growth rate. Note the growth rate in EBITDA. Then profit after tax. Profit after tax of 92 crores in fiscal year 26. It was 78 crores in fiscal year 25, 75 crores in fiscal year 24. And again, note the growth rate. So we have the historical financials, the three financials on the P&L, and we can see the growth rate in those financials. What does the company do? The company is a diversified EPC company. Okay, it's written here diversified EPC company. We've got four segments: power transmission distribution, solar EPC projects, water infrastructure, and railway electrification. They're an EPC firm, engineering, procurement, and construction. So, for example, in railway electrification or solar projects, they do not manufacture the component or all the components. They procure many of the components, like solar panels from here, wires from here. They will procure it. They will design, they will engineer how much of what is needed, how much of solar panel is needed, how much of connectivity wires is needed, and etc. And then they will construct, they will assemble, and they will construct the overall project. So they're a solar EPC firm. You got four different segments, okay? And now order book. So two order book statistics you will get, statistics data you will get, numbers you will get. One, as of March 2026, they have an order book of 5,206 crores. Then, as of July 2026, that order book increased to 6,400 crores. So in around, how much is it? March, April, May, June. After 3 months, order book has increased from 5,200 crores to 6,400 crores. Okay. Now, client type, 61% private sector, 24% government, 15% PSUs. Okay. Then order book composition in terms of segments, 63% order book is from solar, 26% power T&D, trading and transmission, and you can see the rest, of course. Then guidance. The company, the management in their earnings conference call stated the company is looking for 2,200, 2,300 crores in revenue for fiscal year 27. And they're hoping to maintain the 14 to 15% EBITDA margin aim for fiscal year 27. Now, the 60% solar revenue, 30% T&D, 10% water. This is the expected. This is what management is expecting fiscal year 27 revenue composition to look like. And this is their expectation for 2,200 to 2,300 crores in revenue in fiscal year 2027. So, the setup and the question I'm asking a significant improvement, not in terms of cash flows, not even in terms of balance sheet, but just for profit and loss, the growth rate. There was a historical growth rate or the historical growth rate, okay, the past growth rate. You saw 916 crores to 1,349 crores. 300? 249 crores, 1,249 crores. And before that, there was a certain growth rate range. And now the company is looking to accelerate to 2,200 to 2,300 crores in revenue. So that is kind of big growth rate, I think it's a 70% plus. Then 14 to 15% EBITDA margin. Again, they're looking to maintain. So they want to, I guess, aiming for EBITDA to grow similar range as the revenue expectation. And finally, let's take a look at profits. So in profits, we have composition of course. Now, of course, this is the P&L of fiscal year 26 from screener.com. Really like the site. So after EBITDA, what do we have? We have other income, 16 crores other income fiscal year 26, 66 crores of interest paid in fiscal year 26, and 3 crores of depreciation. So if, very important, if it's a big if they're able to achieve 2,200, 2,300 crores in revenue, 14, 15% EBITDA margin, then to figure out the profit before tax, okay, to figure out the profit before tax, how much can they grow from this 121 crores in fiscal year 2026 profit before tax? Okay, what will the other income be? Depreciation as of now is very low because they're an EPC firm. Okay, they do not have a lot of fixed assets. So what will the growth in fixed assets be? Right? Interest cost, what will the growth be in interest costs? The tax percentage, the effective tax rate, what will it be? Will it be 24%? Will it be 30%? All that is to be paid attention. So that is the setup we're looking for, a setup of significant improvement. One more thing, the company is planning this like massive solar IPP project. Basically, in this one, like previously, solar EPC they will make the solar power plant, they'll sell it to client. In solar IPP, they will own, they will make the plant, but they will just sell electricity to the client from that plant. Now that solar IPP project is massive. It will require a lot of debt and it will lead to a lot of depreciation, but it's highly profitable also. So that is to be kept in mind also because how exactly are they bringing the solar IPP? When will they bring it up? Will it be like they initially bring it up and interest costs and depreciation will balloon and the revenues from the IPP will come in later? So they have started it and I guess they're doing it in phases. If I remember, a few megawatts have been installed and they're getting around, I think, a crore or 2 crores in monthly revenue around that. One may have to actually confirm from the con call, but 1 crore-ish of monthly power sales. So they're executing it in small phases. So let us see if Vikram Engineering can achieve this significant improvement in the growth rate and can they achieve their guidance. So that is it. Bye bye.